Welcome to the Life Success and Legacy Podcast. We're glad you're here, and we hope you enjoy the episode. Hey everyone, welcome back to the Life Success and Legacy Podcast. I am not Chris Bay, I am Michael Crawford, and I am joined with two of our other Mikes, Mike Everett and Mike Kwong. How are you guys doing today?
Good morning.
Hello.
Good. I know it's the day of this recording. It happens to be a very special day. What is that day, Mr. Kwong?
Oh, it is my better half's Pay's birthday.
Yeah.
Woo!
That's so great.
14.
That's so cool. Yeah. Yeah, I've been following the DIBS chat this morning. A lot of folks are wishing her happy birthday, and I'm sure that makes her feel real good with all the attention and, on her birthday. So.
She doesn't like that.
I know, that's what I was going to say.
Pay and I like that attention.
Yeah. We as a team just wrapped up our first, our quarterly meeting for the first of the year. And, we talked a little bit about this at the front porch last night, but would either of you like to give like a minute and a half recap of how you felt that all went, to kind of give the listeners a little bit of insight into how we function and what was going on with our brains?
Oh, man. MK, you got something on the tip of your tongue?
Well, after our meeting, I mean, we have so many like developments ahead, improvements to, our process, locking down our systems. And we're going to talk a little bit about that. Systems, right? But also, updates to our learning events, the boot camps, super fun stuff, a lot more engagement on its way, which is real important for learning, right? And that's what we're all about. So,
I might just throw this out, and you guys know how. If I would have thought that we were doing what we were doing in our quarterly meeting like 15 years ago, I'd have thought, oh, come on, dude, are you serious? But, we spent probably a 7 to 8 hour period over a 2-day period talking about the systems and the processes, and really what does it all come down to? It comes down to our clients and being able to serve them in a greater capacity in a number of different meaningful ways, so they can actually utilize their IBC system more effectively. And I think what we're trying to do is we're just really getting to where, as we are functioning as a team, to not step on each other's toes and not duplicate some of the processes that we already do. So excited for the days ahead and the growth that we're experiencing.
Mm-hmm. Yeah. I said this last night. I think one of the major focuses, and we tell our clients this all the time, but I think it's just funny how our quarterly meetings, while they are focused on like business process and how we can do better, all of that doing better isn't about us. It is about our clients. And
100%.
What we can do to be more responsive, how we can be more helpful, how we can provide tools in a simpler manner. I mean, fill in the blank. Any and all of the goals that we set for our team, over 90% of them have very little to do with LSL directly. Yes, they affect us, but they have everything to do with how our client success is shaped. And so I think that that's a really fun aspect. When I was reviewing and doing, Chris and I did a little bit of a post-mortem on our quarterly meeting in our chat yesterday. And he and I both were just energized by the fact that it seems like our mission is to stay focused on our clients. And that didn't get wavered at all during that meeting. So,
Yep.
All right. Well, an interesting question we have pondered over the course of time is the idea of building wealth through systems and not products. I think it's really easy, especially with the noise out in the world and on social media and YouTube, etc., is to constantly think, what product can I get to build wealth, or what product is going to bring me the most success? And I don't want to steal any thunder because I'd like to hear from Everett on this about Nelson's thoughts. But one of the statements he made all the time, it's more about how you function than it is about the company or the policy. And so, Everett, if you want to take us through a journey on how that all, like, from historically, how Nelson sort of, in a good way, pounded that into our heads. Like, don't think product, think process.
Well, first of all, you got to go back to the book.
Amen.
And it's so funny how Nelson used to, in fact, we at our front porch last night, which was my very first one, by the way. One of the guys mentioned, gosh, he really wish he could go to Nelson's 10-hour seminar.
Mhm.
And, Nelson's 10-hour seminar was more about some of the great stories that he had, some of the anecdotes that he had. And, there's hardly a way that we could duplicate that, right? But I go back to the book all the time. In fact, that's where I spend like 90% of the time when I'm doing my study, when I'm thinking through. And becoming your own banker is really just a 10-hour course about the power of dividend paying whole life insurance. But now think about this. Dividend paying whole life insurance is a product.
Mhm.
But yet he wrote the book so people would be able to sort of rethink their thinking as to why the product and what we should do with it. But yet he said, forget about the product. He said, even the insurance companies are pushing what? Products.
Yep.
But he said, your behavior is much more important than the insurance companies. But yet we've been pounded to think that we should put money here into a 401k, an IRA, a mutual fund. It has nothing to do with the products itself. It has to do with the process.
Mhm.
And so what Nelson has done is he's created a tool, becoming your own banker, and he's given us really a roadmap of how we can actually create the kind of wealth, the freedom, the flexibility in our lives financially just by utilizing an old school product,
Mhm.
but yet using that product to change many of the different variables in our lives.
Yeah, I mean, I think that what we hear from all of the noise, like I said a minute ago, is look for the best rate of return, look for all of these things, and Nelson attacks all of these in the in his book. But one of the things that that I think stands out to me in the book as a really good reference point is if you go back and you read How to Finance a Car, How to Purchase a Car.
Mm-hmm.
And he does an apples to apples comparison of using a certificate of deposit at a local bank versus infinite banking. And that is him representing for us and our silly little brains an apples to apples comparisons of products compared to one another. But it had more, and he even explains it in the second half of the chapter, it has more to do with the function of the process than it did with the bank. The only major difference between the process or the product itself is with the dividend paying whole life insurance, we get the benefit of the dividends, whereas the certificate of deposit at the bank, the shareholders of the bank get that benefit. And so, again, he was just trying to give it to us in our brain because he knew we would keep asking the question, well, what about this product? What about this product? He was giving us an apples to apples. And even then, IBC still is a better process than the certificate of deposit.
Mm.
It's good.
Well, I might throw this out because in the early stages when the two twins were financing, they were first of all they were building a pool, and then they started financing their vehicles. First thing that pops into my mind is think long term,
Mhm.
capitalize generously, and then if you utilize your system, don't steal from it.
Right.
But yet, if you think about the way in which most of us before IBC came into our lives, if we paid something off, we just forgot about that payment, right?
Yep.
Mhm.
And we quit utilizing that payment for the betterment of our own lives.
Mhm.
And so
Mhm.
I immediately go to page 26 in Nelson's book, where it's just the basic understandings
Mhm.
page.
Mhm.
And right in the middle of the page, it says banking is a process, not a product. But yet, when we go in the bank, what do they have? They got all these awesome products. But what they don't want us to know about is when we make a deposit into their bank, what do they do with it? They utilize those dollars. And we could get into all kinds of minutia there. But yet, if we have our own system where we actually utilize our own system, then all of a sudden those same dollars that we were going to put over here in XYZ Bank goes into the Kwong Crawford Everett banking system. And guess what we get to do? We get to utilize those dollars again and again and again. Ooh.
Well, actually, that's a really good segue into my next question for Mike Kwong is, I wanted Everett to kind of give us that foundational start point from where Nelson really created his, or it came out of his brain and, how he truly understood banking as a process, not a product. But now I'd love to hear how you and Pei have really capitalized on this internally as a family, and then you brought it to the world in terms of finding a way to marry a couple of really impressive or incredible concepts.
Oh, sure, absolutely. So, thanks for that. But right, just like when I explain IBC, right, I always mention this. I say infinite banking concept. What's the C stand for? Concept, right? Not carrier, not company. It's a concept. So first of all, that means that's something you have to understand,
Mm-hmm.
right? And like Nelson says, it's about your behaviors with the product. And it just so happens that the dividend paying whole life policy is the ideal product for this concept to work. So to that end, infinite, right? That's important. Why? Because I mean, it's infinite in the sense that you can literally use one of these properly structured policies for almost any type of, financial, endeavor, right? The traditional experience for a lot of folks, like Nelson talks about, is all the debt that Americans have. And we have our awesome, IHF software that goes to town on debt. If you can structure a policy properly, right? We're just utilizing the universal power of velocity banking, right? Velocity movement, right? Dynamism. And the policies can eat up all that debt, right?
Mm-hmm.
And run essentially like a debt snowball. And we can talk more about that, but we talk about that a lot, right? The other half of the story, though, that we kind of realized that you can do with the policy with the same powers, right? The same principles of finance with leverage and interest rates is to build passive income through a policy, right? And again, this is the same policy, right? Whether you have it in one gear going reverse, right, to chomp up all that debt, or in the forward drive where you can start building up some appreciable passive income streams, it works. But the key isn't just in the policy, right? It's in about knowing how it works and what to do with it and to take the steps to that end. So absolutely, the C is a concept that, man, it's really amazing what it can do.
Well, it's the infinite part of it, right? Is like there's a lot of people doing a lot of really amazing things within the IBC construct.
Yep.
But I think that the reason I asked you specifically about how you and Pei have structured things is because like you guys started in 2011 with your first policies?
Our first call, 2013. Yeah.
2013. So like, but you went through the gauntlet of like different things and how you could use your system and how best to manage your dollars as they flowed through your system. You were still teaching, you were still all these other things as you kind of learned through IBC and organically, sort of almost like Nelson kind of getting hit on the head, as he said, whenever the interest rates jumped and he kind of got stuck in a pickle with all that stuff. You and Pei went, oh, what if we did this? And then the brainchild that is, income stacking through DIBS, was born. And I think the evolution of that is just such a fascinating, like, I don't know, collision of two incredible things. So
Yeah,
You know, before you jump into DIBS, you hit on this I'm going to say this, unlock the infinite banking concept. So infinite, you dream it up and we can design around it.
yeah,
And I think that's really where the birth of DIBS actually came. So
yeah.
boom, I'm making the bounce pass back over to you, MK.
absolutely. So this brings to mind a recent, presentation that we had in our DIBS chat, community. We have Zooms for our members and clients, of course. And that's the example of the forced yield, right? I don't know if you guys saw that, but using, two instruments, right? And this is all part of the DIBS, dynamic income banking. Two instruments. Let's say, a 24% line of credit, okay, which is exorbitant, right? That's a very expensive line of credit. And a very simple, stable 3% earning, investment, okay? Similar to, Mike, you ever remember your example with the car and the CD, right? And 6% and the 4%, okay?
That's right.
And that's a 2% skew. But my point is, the example we ran through and the numbers, we crunched it all out over a 6-month period with your own positive cash flow, okay, running this one strategy of forced yield, you can essentially borrow from a 24% expensive line of credit, earn just 3% for the next 3 years, okay, because it's amortized, and come out ahead by an appreciable amount in as soon as 6 months. I know it doesn't make sense when you hear it, but when the numbers, like I said, it's wild. It really is wild.
Yeah.
It sounds too good to be true.
But it's just math. If you understand it.
I totally get it. Because when I do the webinar, people go, well, this does sound too good to be true. And I go, it does. But when you put everything on your side of the ledger, everything changes.
That's it.
Yeah. Yeah, and I think that actually, brings me to another idea that I had as it pertains to like using IBC as a way to build wealth. There's sort of the old school way of thinking, and there's the new school way of thinking when it comes to DIBS and integrating these other processes outside of infinite banking as it sits naturally. But one of the things I wanted to ask you, Everett, was Nelson talked a little bit about the idea of a system of policies. Because he said for many folks, one policy probably wouldn't be enough. And why would he say that? Because, insurance is insurance. What does he say means? What does he mean by that?
Well, so the bottom line is, because of the way Nelson helped us learn how to design, especially designed life insurance, whole life insurance, he realized that there was only a certain amount of income that we would have at certain periods of time. So if you go back to when we first all started working, could we have bought a $50,000 or $100,000 annual premium policy? We could not. So very, very, very few people have that kind of cash flow to be able to, throw dollars to premium deposits. So what we're trying to do is get people to build this system. So I'll use me, for example. I have 22 policies now. I couldn't have afforded in even my early IBC career, the premiums that I'm throwing towards deposits on my existing IBC policies. So I knew that I had to get multiple policies. I've got 6 on me. I got 4 on Linda. I've got 2 on each of the kids, and I've got a number on the grandkids, and even my daughter-in-law and son-in-law. So part of what we've got to get people to understand is, as you're doing this, we're staggering those policies so that they will be able to manage the cash flow. I'm going to call it premium deposits that they're making into their system. Remember, this is called the infinite banking concept. So that means that if you're thinking about your own, I'm going to use checking or savings account, every week or bi-monthly, you're making deposits into what? Your own account, correct? But what we're doing is through IBC, we're creating a system to where you have a secondary place to deposit some money. I'll say secondary, but it is really primary in my life, in your life, because we're just using that exactly like our checking and savings account. It is a flow through. It is nothing more than, hey, I'm going to put this money here, whether it be through premium deposits, whether it be through policy loaner payments or whatever. It is just literally a holding tank for some dollars while we're deploying them out for other things, whether it be for a car purchase, whether it be for real estate, whether it be to start your own DIBS program.
Yeah.
So,
and that's actually, I set you up on that one because I wanted you to talk through Nelson's process of understanding that the system of policies is in an effort to build your base and to build what your dreams are for the future. However, the idea of integrating DIBS and income stacking along with that addition of new policies at a strategic time, right? I mean, even think about it, Everett. You told us the other day that you talked a client off the ledge from buying a policy. And I mean that in a good way, right? Like they weren't ready. The finances weren't going to be quite there. And our job is to put them in a better place tomorrow than they are today. And that wouldn't have been the case.
That's exactly right.
But then you think forward and like you said, as people grow and mature in their infinite banking journey, then we start talking to them about ways they can expand upon that. Maybe they've gotten rid of most of their outside debt. And then we say, you need to talk to Mike Kwong and you need to learn how to integrate income stacking into your system, because that's next level. That's like level 400, right? You know, where that we take it up that next step and we say, you've got your foundation, let's take it to the next level.
Yeah, and I love that you use that word stagger, right? And a lot of times we think about that on an annual basis. You stagger your policies, the first policy you get, you know, maybe by that fourth or fifth year when the PUA drops off, traditionally that's a great time to consider another policy. Another way to consider staggering your policies is whenever that happens, right? And for some clients, it could be within the first year or two that they are ready for the next policy. We also think about staggering the premiums as far as the anniversary dates. That's really important because when you understand these policies, once they're, you know, capitalized and even while they're capitalizing, they are 100%, you know, fluid or liquid, right? The monies can hit the premium and flow and have the next 11, 12 months almost, right? That they can be doing other cool stuff.
That's right.
that, you know, that growth and compounding uninterrupted. And so think about that. That means you've got 11 more months of opportunities through which you can flow these dollars. That's the way I think of it, right? Through our system of policies. Each one is a chance to hit home plate, get that point, you know, and after the first or second year, it's more than 1 point, right? It's 1.1 points or whatever, right? So think of it that way. You know, there's different ways that we can build out a system that makes sense, that's efficient, and can scale up your needs, you know, really quickly. So. Cool stuff.
Man, that's great stuff. Yeah, and I think the overall point that I hope we're driving home with people here is there's Nelson's foundational principles in becoming your own banker are where you start.
That's it.
You start at that foundation. Everything else we talked about and all the other processes that we've discussed are add-ons, but they are amazing supplements or augmentations to Nelson's foundational principles. But everything points back to that, even through income stacking and DIBS and, you know, all of it. And so I think that the goal here for folks is that if you're concerned or questioning how best to continue to build wealth or how to continue to build your system of policies, or you just want a better foundational understanding of how infinite banking works, start with the book. Come to a coach. We will be there to support you. Our goals are, and we started the podcast with this, our entire team goal is to ensure that we are supporting our clients to the best of our ability. And we are continuing to learn on a daily, weekly, monthly basis as well. So any final comments before we land the plane?
No, just super good stuff. I love the fact that you brought it back to the book and to Nelson's principles, because really The thing that popped into my head was something that I say to almost everybody. Babies learn to crawl, then they learn to walk, and then they learn to run.
Yep.
And because of our world, because of what we've watched in other people's lives, we all want to get into the run stage as fast as we can. But IBC is exactly like a small child.
Yeah.
The baby learns to crawl first,
Yep.
so their muscles will develop properly.
Yep.
They eventually get in the run stage. So with IBC, you've got to read the book. You got to come to a webinar. You got to do some coaching and a dream conversation and let us walk you through the process, because then your muscles will develop properly. Think about a job that you started, like your very first job. Did you have any idea what you were doing when you started your job? You had no idea, but many of the people could actually go and do their jobs blindfolded now because of what they've learned. Yep. IBC is exactly like that. It becomes part of your daily life. It becomes a response that you kind of go, wait a second here. I shouldn't do this, but I should do that. So we get excited about it. We love teaching it, and we love spending time with the people that want to actually educate themselves at the level that we offer.
Yeah.
Amen. Yeah.
Good stuff.
All right.
All right. Well, thank you to our listeners for joining us on this exciting episode, I hope. We would love to hear from you. If you have any thoughts or ideas for podcasts, please reach out to any one of us on the team. A reminder, if you have any questions for the team, you can always submit those to our support channel, which is support@lifesuccesslegacy.com. You can also visit us at our website, lifesuccesslegacy.com, to find additional podcasts and information and learning tools and everything else, upcoming learning events and everything we have planned. So until next time, hope you all have a good one.
All right, over and out.